Welcome back to the channel. I'm Scarlett from Miss Money, and I just bought more shares of Tesla despite the dips, and it's partially because of the news I'm about to talk about today. Cathie Wood recently made a steep purchase, and you won't want to miss the inside scoop I've got. And remember to like and subscribe to the channel real quick as we grow our community here. We're all about making some big gains, and I hope you are too. So, Cathie Wood said ARK Invest is still bullish on Tesla and continues to buy up shares of the electric car maker, even with the dips we've seen recently. She has said, our confidence in Tesla has grown as we've done research on what ride-sharing potentially could add. It could limit the risks significantly. It's a much more profitable business than electric vehicles. Even though there's some debate at Tesla whether or not they should launch a human-driven ride-hailing network, it would be a very good bridge, we think, to their autonomous strategy, and we think they will decide to do that. Tesla is the largest holding in ARK, making up more than 8.5% of the ETF's total weight. Wood said the probability of having successful autonomous vehicles is going up, and therefore ARK's price target will follow at some point. Wood is a longtime Bitcoin bull, with big bets on the Grayscale Bitcoin Trust. Wood told CNBC she expected institutional interest in Bitcoin this year, but Tesla's purchase of the digital currency was a surprise. ARK added over 130,000 shares of Tesla last month when Tesla revealed a $1.5 billion Bitcoin investment and said it plans to begin accepting the crypto as a form of payment in the future. Wood argued an autonomous ride-sharing play by Tesla could limit risk significantly because it's a much more profitable business than electric vehicles. And here's the clip.
Cathie, great to see you, and what a tremendous year it's been for you. You now have over $50 billion in assets under management, and your flagship ARK Innovation Fund's up nearly 20% this year alone. But I've got to start with your biggest holding. It's Tesla. In the ARK Innovation Fund, it's also in the Next Gen Internet Fund. It's also in the Technology and Robotics Fund that you run. How do you feel about Tesla's price now, and are you still adding to your position?
Yes, well, as you know, we report our trades every day, and you will see that we have been adding to Tesla. Our confidence in Tesla has grown as we've done research on what ride sharing potentially could add. It could limit the risk significantly. It's a much more profitable business than electric vehicles. And we do think, even though I think there's some debate at Tesla whether or not they should launch a human-driven ride-hailing network, it would be a very good bridge, we think, to their autonomous strategy, and we think they will decide to do that. I don't think anyone has in their models anything for ride sharing. And then as time goes on and we learn about their artificial intelligence expertise, the 30 billion miles they've collected of real world driving data, no one comes close, not even, I think Google might be at 30 million compared to 30 billion. And we know that in the AI world, and autonomous is AI, that the company with the most data and the best quality data will win. So we're pretty excited about autonomous, and the probability of success in autonomous, we believe, is going up, and therefore our price target will probably follow at some point.
But I should note that Wood has said that there is potential for a valuation reset if rates were to take a sharp turn up. I continue to be bullish about Tesla, especially as Tesla has expansion plans in Berlin and Austin, and now Tesla has set its sight on India, planning a new manufacturing unit there. What sets Tesla apart is its in-house battery development. By 2030, Tesla intends to grow its capacity tenfold. Additionally, unlike any other OEM, or original equipment manufacturer, Tesla is fully vertically integrated. All aspects of production remain under the Tesla umbrella. And that's not all. Tesla has factories in the US, China, soon to be Berlin, and as mentioned, hopefully India in the near future. Tesla can benefit from local subsidies, bypass tariffs, and ocean freight costs. But the recent dips could be for various reasons, which we should address because if you're investing in anything, there's always risk involved. First off, Tesla cut the price of the cheapest version of its Model Y and its best-selling Model 3 cars by $2,000 each. That brought the price for the standard range Model Y, one that can travel 244 miles on a charge, to $38,490, and the standard range Model 3 to $34,590. But over the weekend, the cheapest standard range version of the Model Y disappeared from Tesla's sales site, leaving only the more expensive long-range and performance versions of the SUV. Tesla did not explain this decision. Established automakers have recently set ambitious targets for their own EV sales. General Motors rolled out an SUV version of its Chevy Bolt, priced well below the Model Y, and announced it intends to sell only emissions-free cars after 2035. Ford set an even more ambitious EV target for its European sales, saying all of the car models it sells will be EVs by 2030. Apple is also considering partnering with an automaker to get into the car business, according to several new reports. Those efforts are making some Tesla investors nervous, although there will be enough of a shift to EVs for multiple winners among global automakers. Tesla shares peaked one day before a disappointing earnings report on January 27th that fell short of forecasts from Wall Street analysts. The earnings showed that the money Tesla made from the sale of regulatory credits to other automakers outpaced its overall net income. Critics said it's proof that Tesla isn't able to make money building and selling cars. During the earnings conference call on January 27th, Musk also spoke about a shortage of batteries needed to power electric vehicles. He said that even with Tesla's own in-house supply of batteries and its planned expansion of battery production, the company is scrambling to find the batteries it wants to build more vehicles. The fundamental limit on electric vehicles right now, in general, is total availability of battery cells, he said. For example, Musk said Tesla would have already started producing a semi-tractor if it had the batteries available to do so. But shares are still way up. Tesla shares rose a market-leading 743% in 2020 as investors embraced the idea that the future of the auto industry would be electric. Tesla remains by far the most valuable automaker in the world, with a market value well above that of the 8 largest automakers combined. Even with the recent decline, Tesla shares are up about 1,300% since October 2019, when it reported a third quarter profit that surprised investors, sending shares on a tear. Some investors believe Tesla stock flew too high, yet many analysts believe Tesla will bounce back. I am one of those people that believes it will bounce back very soon. I think we'll see Tesla bounce back above $900 per share. I think right now you need to get in, as this is the perfect buying opportunity before Tesla expands, especially with its locations and manufacturing units expanding. I believe we'll see Tesla bounce back up above $900 per share. Get in now, as this is the perfect buying opportunity before Tesla expands. Thanks for watching. I'm Scarlett from Miss Money, and let's invest and get rich together.